Welcome back to Primary Source China Investment. Happy Thanksgiving. I hope everybody's recovered and had a festive day with family and friends. Peng.guo and I are here, and we're going to talk about some hard truths, which is the China economy is going through some things. There's no doubt about it. And if we've done anything on this show, it's that we've tried to be objective. We're not long, we're not short, we're not selling anything, and be wary of those who are. As we sit here facing year end, we need to look at the business cycle, or maybe more accurately, the COVID cycle, because things don't look to be getting any better in the near future, and they might be getting worse. And Beijing is not going to sit still. Beijing is going to implement policy that they believe is going to help. Unfortunately, it looks like the same supply side economics are what they're implementing. So the first is, an old saw, the triple R cut. So what this means is it will free up capital for banks to do some lending, right, Peng.guo? I mean, this is the first tool that they use. And we're going to put up a chart to show you all the cuts that have been happening.
Yeah, the central bank have many tools. One effective tools, they just adjust the 1 year midterm lending facility rate. So that is means the central bank lending the money to the commercial bank. So they reduce the rate. That really means give the more money to the central bank and also increase the money supply in the market. They just make an announcement yesterday to reduce a 0.25%, and it will estimate increase 500 billion renminbi in the market in the supply side.
I see. So I think, again, the first was the triple R cut, which allows banks to keep less on balance sheet, which means they can lend more. The second is the lending rate to the best banks. And then maybe the third thing was the 16-point plan for the property sector. I mean, we mentioned that last week, but if you look at all of those individual policy changes, they all seem to circle around the same result, which is let's help the property developers. Property development loans for developers, home buying requirements for individuals going to be set at reasonable levels, construction companies, and then further down the list are some market functioning bankruptcy rules and regulations, which obviously we've been talking about for a long time that are going to help. My problem with all of this, Peng.guo, is that all of this is going on the supply side. There's not a lot of demand side, which means if there's more money in the system, I feel more money is just going to be used for savings. And if we look, savings rate hit an all-time high in the first 8 or 9 months of the year.
Yeah, supply side is might be easy to get managed. Consumer demand, that is a big problem. In the recent China capital market, there's really like the four themes. So number one is federal increase the rate. So that is really get a huge impact for the globally. And secondly is China's COVID policy as well as many actions in the city. So that's really affect everybody's daily life. So they really try to adjust. Nobody experienced such a COVID restriction policies before, and they have to make an adjustment. So that's a lot of discussion, and also this is a daily topic about that, and also expand to affect all the economy.
Yeah, I read a Nomura report, and they said something like 21.1 is a very precise number of China's total GDP is now under lockdown, and that's up from about 9.5%. So whatever we think about those numbers, the reality is more and more things are going into lockdown. So that the derivative effect of that is that people feel less and less secure about the future, and they are less likely to spend money. And you see that in the savings rate. Household savings jumped 13.2 trillion in the first 9 months of the year. All of this, we won't call it stimulus, all of this policy change may not drive the consumer to buy anything. You may want to save the property developers, you may want to spur development, but that doesn't mean the end buyer is going to step up to the plate and make purchases.
That's right. If you are the think about the future, that really means the buying power. So all those recent things is really try to reduce the system risk. So the third actions is China really try to adjust the real estate risk. So they try to make the good real estate companies give them tool like the increase their credibility, extend the rolling roll, and extend the debt, whatever. They try to save some of the good real estate company. Looks like it works recently. So you will see these sectors get bounced back and pretty much leading sectors. And also for the consumer and the private companies market, they all get a shrink significantly. So that is really takes time to get back.
Just a point of clarity, peng.guo. You're saying that the small and medium-sized firms are shrinking?
Yes, that's probably looks like millions of the private companies get affected.
Yeah,
Many of
cannot
them lose the
survive. Yeah,
money.
yeah.
Yeah, either cannot survive or lose the money. So it's
Yeah.
quite common in China right now. So I think that's probably naturally many companies might be closed. And then whatever survive it, they probably, if they can survive this wave, they might get a much better market with less competition.
Yeah, we saw that in the US. When we had all this shutdown, retail was decimated in the US. A lot of mom and pop shops, they all got wiped out. They couldn't survive. And now we're seeing, some sort of renaissance. I mean, here in New York, you see a lot of new retail coming in, retail that hadn't been here before.
Yeah, another pretty good thing is the China inflation is okay.
Yeah,
So
that's
compared
true.
to other countries, it's pretty good. And the government take a lot of the good actions to save it and control the price or increase the supplies. I think overall, even like the October, the inflation probably get dropped 6.6%. So
Hmm.
it's still relatively low. And PPI is still getting low. So which is good for the recovery.
So, final question: if you have a lot of savings and the property market is not a guaranteed return like it's been for 20 years in China, are retail investors going to dip their toe into equities or fixed income or commodities? Where do you think, or private equity, where do you think 2023 might lead them?
Travel.
Travel. Yeah. You know what? I think that's probably a smart, a
You can
smart
imagine
sector.
if you get a locked in the room for a couple of months, and the first thing they just want to go outside. Or the travel, the airline company, and all the hotel and all the related things, probably they can easily get bounced back.
Well, I think that's a great place to end it this week. So we'll look at I'll put a chart up of some of those indexes and some of those names on the mainland so people can take a
Yeah, you
look.
will see they have a travel ETF, and in
Of
China,
course, of course,
yeah,
of
that's
of course,
getting
of
bounced
course.
back.
Yeah,
Mm.
well, we'll look at some of those big names. Well, all the airlines are state run, so those are the biggest names out there. But there are a lot of independent hotel operators on the mainland too.
Yeah, that's true. Mm.
All right, well, we're going to leave it there with show E4. Thanks for tuning in, and we'll talk to you next week.
Thank you.